All righty, we are live. Guys, what's going on? So it is officially earnings season, which obviously is a very exciting time for us dividend investors. And while it's been nice to hear from companies like Microsoft, Union Pacific, and Lockheed Martin this week, I think there are three companies in particular whose earnings we are particularly anticipating. And we're talking about AT&T, 3M, and Intel for sure. And in this video, guys, we're going to be reviewing all of the earnings reports from these three companies. But before we get to all of that, welcome back to another Dividend Happy Hour. Sorry I missed last week. I'm so excited to be back with you guys again for another awesome week. We've got a fun video planned tonight. But guys, before we get into all of that tonight, we need to do a cheers. And I'm keeping it clean tonight. I'm drinking some water. But hey, cheers to another good week. And here's to another good Dividend Happy Hour. So guys, cheers. And also, I want to hear from you guys. A couple things from you tonight. Number one, what did you buy this week? Which stocks did you pick up? Let me know here in the live chat or in the comments below if you're watching the replay. And also, number two, if you brought something good to sip on to tonight's Dividend Happy Hour, let me know what you're drinking there in the live chat. And also, once again, in the comments below if you're watching the replay. I'm going to put some of your guys' comments here up on the screen, and then we'll go through and get into tonight's main event. But before we get to all of that, Riaz, what is going on, my friend? Harris is in the building. How's it going? TCAF here as per usual. We got Bob. We've got Aussie Investor, the legendary Shamir, Shaping, Will, Chris, Suzuki Man, Phil Doe the Great. We have all the usual suspects here tonight, guys. It's so good to be hanging out with you again. Citizen of the Year, what's going on? We've got Steve C., Lucas. Man, the whole gang is here tonight. Thank you guys so much for tuning in. We got Robert in the building, Alfonso. Awesome. We are up to about 50 people now in the stream. And for those of you who are just now tuning in, just to kind of reiterate tonight's itinerary, we're going to be going through three different companies, just kind of talking about their earnings a little bit. Nothing too crazy, just high-level overview, maybe what happened, maybe what's going to happen. We're talking about AT&T, 3M, and Intel. So that's going to be tonight's main event. And I'm just sipping some water in case you missed it. I have... If you guys saw my community post from earlier this week, well, I'm guessing most of you guys, I'm sure did. But I have some friends coming in this weekend from California, so yeah, it's gonna be a wild weekend. So I gotta prep my liver a little bit. Not gonna lie to you guys, it's gonna be one for the books, and that's also why we're doing this stream one night early on Thursday. But I couldn't leave you hanging. I knew I wasn't going to be around tomorrow, Friday, but I could not leave you hanging for another week. I missed doing this happy hour too much, so we had to get it in. But anyway, let me see. What do we got here? Looks like Shamir is drinking I think he means a Bang energy drink. Drinking a Bang energy. Alfonso this week picked up some KRC and Intel. Wow, my friend, Intel. That is a bold move. We'll be talking about that later on in the video. Robert's drinking an Angry Orchard. That's a good choice. That's a great choice. Lucas drinking some water as well, but into the electric lettuce. I don't know exactly what that is. Let's see what's going on. Ricardo, let's see, Union Pacific, QQQ, VTI, and SCHD. We got Will drinking a cold hard Pepsi. TCAF here picked up some SCHD, WP Carry, ARCC, and he's drinking a cherry soda. That's interesting. B Still Sounds in the building. Picked up some Clorox, Coca-Cola, UPS, Procter & Gamble, and Johnson & Johnson. I actually picked up some Procter & Gamble myself this weekend. It's hovering kind of around my average cost per share, so I figure right now is a good time to swoop up some shares. Eli, been buying some Kroger, Altria, and SCHD. Good choices, my friend. Chris, just 3 shares of Intel. Man, you guys are feeling pretty good about Intel, apparently, after today's earnings. And just kind of a disclaimer, too, as we're going into, all the earnings calls and stuff, which we'll be talking about in the video. Obviously, I have not listened to Intel's earnings call yet. I've seen the highlights. I went through the presentation. But the other two, AT&T and 3M, yesterday I did go through and actually listen to the calls, which is fun. Let's see, what else? Who else we got here? Professor Joe, I think I might have missed a couple of you guys. I'm so sorry if I did. Professor Joe's drinking a White Claw. We got Ethan drinking some Jeppy. Sounds delicious. Shamir, 3M call was pretty depressing. I honestly didn't think it was too bad. We'll talk about it. We'll talk about it in the video. We'll talk about it. But I honestly did not think it was too bad. Anyway, guys, I think it is about time. Why don't we get into it? So, okay, guys, we are going to start this off by talking about AT&T's earnings. So I'm going to put this on the screen here. This is kind of just the high-level overview of what happened. So for the quarter, they did EPS of 61 cents, which beat by 4 cents, so a nice beat on the bottom line, but they missed on the top line. They missed the revenue estimations by $70 million, which isn't really anything too crazy. It's just a slight miss, but some of the highlights that came out of this earnings call for AT&T were revenue growth up 2.5% year over year, earnings growth up 6.6% year over year. And you'll have to forgive me, I don't remember if these are the annual numbers or if these are just the quarterly numbers, but either way, it's looking good. But then for the full year, AT&T brought in $14 billion of free cash flow, and this is like actually pretty big. So they're expecting to bring in even more free cash flow in 2023. They're hoping to increase that by $2 billion, which is great. That bodes well for us investors. Hopefully, we might get a little dividend growth, or they might continue to reduce the debt, which actually probably would be more preferable, specifically for AT&T. And they did a good job of reducing the debt, which, as you guys know, is one of their big issues. They did a good job of bringing that down a little bit here in 2022. They reduced it by $24.2 billion, a lot of those funds came from the spinoff of Warner Brothers Discovery. So they got a nice chunk of change from that they put towards knocking out some of that debt, and they will continue to do so in 2023. And I believe, if I'm not mistaken, their goal is to, what was it? Their goal is to reach like a net debt to EBITDA ratio of like 2.5% or 2.5 or something like that. And they're getting closer to that. Like I said, they're chipping away at that debt. They'll probably continue to do, they'll definitely continue to do so over time. But I would not be surprised if we didn't see any dividend growth from AT&T this year, maybe in 2024, excuse me. But, I'm not expecting much in 2023, which is okay. The dividend stats, or at least the dividend yield, is still looking pretty good, which we'll see momentarily. But going back over here, guys, we're going to actually jump over to Seeking Alpha. Sorry, I was just looking at my notes. Getting all crisscrossed, my friend. So actually, let's go over here and take a look at AT&T on Seeking Alpha. So from this recent earnings call for AT&T, they popped, as I'm sure you guys can imagine. I mean, the last month, they're up about 9.5%. But this right here, let's actually zoom in. This right here is where they had their earnings call. As you guys can see, it went from about 19 bucks per share up to 20.3. And I don't remember the exact percentage, but it was pretty close to a double. Well, we can actually do this math, right? Maybe it was like a 6% gain or something along those lines. It was a pretty big jump for AT&T. And I read something down here that, okay, yeah, AT&T is at a 6-month high after this earnings report. So good news for AT&T. They've been on the up and up, which seems to be the opposite of what Verizon is doing. But even still, just in terms of valuation, AT&T's PE ratio is still pretty low. Taking a closer look at this valuation too. This nice low single-digit PE ratio is still about 9.5% lower than the 5-year average. So even though AT&T has been climbing, they're still a bit discounted just based on this one metric compared to where they've been on a historical 5-year basis. And if we look at some other valuation metrics, price to book is 1.1, so they're trading very near their book value. This is also 8.5% lower than the 5-year average, and the price to cash flow couldn't be lower. I mean, it technically could, but guys, this is pretty dang low, and this is also 21% lower than the 5-year average. So across all three of these valuation metrics, AT&T still looks pretty discounted. I mean, these numbers are good in their own right, but compared to AT&T on a historical basis, it looks even sweeter. Now, talking a little bit about the dividend, I mean, we know that they have negative growth. We know that they cut their dividend, which is why there's 0 years of growth here, which was a result of the Warner Brothers spinoff. So don't worry too much about this. This was, we saw this coming for sure. It was no surprise that was going to happen. But even so, after the spinoff, this dividend yield has stayed pretty high, up near 5.5%. So, I like a lot of what I see, I like a lot of what I have seen from AT&T since the spinoff. And I think overall, it seems like the company's headed in a good direction. And I personally might even consider contributing more to my AT&T position. And just showing you where I'm at right now with AT&T. If we go over to my dividend portfolio tracking spreadsheet, which you guys know you can start using this for yourself at any time. There's a link to it in the description of this video. But here's my AT&T position, guys. Let's zoom in on this just a little bit, okay? So I have 101.5 shares of AT&T at an average cost of $21.60. So if the share price is right around 20 bucks per share, really, and this might be a little bit off, guys. In fact, if we compare it to Seek, oh, no, I guess it's spot on, excuse me. But anyway, guys, going over here, this leaves me with a negative return of about 7.5%. But if we take dividends into account, I'm actually technically up on my AT&T position, which is the first time I've seen this be the case in a long time. But still, just without dividends, I'm still down about $162.50. But you know, such is life. And like I said, AT&T is on the up and up, and we can actually see they're getting pretty close to the top of their 52-week range. If they add a couple more bucks to that share price, they'll be right there. So, yeah, like I said, guys, I'm considering maybe adding a little bit more to my AT&T position. I'm down just enough that I feel like, okay, it's not like super drastic. It's not like freaking me out, kind of like 3M and Intel are, which we'll see. But, you know, it's down a little bit that I can still take advantage of a little dollar cost averaging, lower my average cost per share just a little bit. So we'll see what happens. I'm not committing to anything either way because I still got some other positions I'm working on, like Apple, which has definitely run up in share price, guys. Actually, on this note, I'm sorry, I'm going on a little tangent here. But looking at my Apple position, guys, so I just started this within the last month. And I only have about 6.6 shares, but my Apple position so far is already up double digits, which is crazy. I haven't even gotten a dividend from this company, and it's already seen a nice return, which makes me think, you know, I don't know. I was going to keep buying Apple every week, maybe make it 3, 4, 5% of my portfolio, but it's like, I don't know. I kind of would much rather buy it in the 120s and 130s and the 140s, so we'll see what happens with that. But anyway, getting back to the main event, guys, getting back on track, actually. Let's go take a look at 3M real quick. So bear with me for just a minute. I need to make sure my presentation, my slideshow presentation is where I want it. Okay, going over to the screen, we're going to take a look at this. 3M, not as good as AT&T. I mean, they missed on the bottom line as well. Missed by 11 cents, nothing too terrible, and they actually beat their revenue estimations by just a hair, only by $10 million, guys. And some of the highlights from AT&T and actually, from 3M, and really what I think most people wanted to know from this earnings call was the litigation news, what is going on with the Forever Chemicals and the earplug lawsuits, and also what's the deal with their healthcare spinoff that they've been talking about. And I've got some news for you guys in both of those departments. So just starting with the litigation, this is directly from the earnings call transcript. They said, with respect to Combat Arms litigation, which is the earplug lawsuit, as last week's report from the Chapter 11 co-mediators indicated, 3M continues to support Aero Technologies, which was their subsidiary who I believe made the earplugs, and they basically tried to bankrupt that subsidiary, Aero Technologies, and just put it all on them, but the court was not having it. So anyway, continuing on, in this ongoing confidential mediation process, we continue to address, and this is the other lawsuit, we continue to address PFAS litigation, which is the Forever Chemicals, by defending ourselves in court or negotiating resolutions as appropriate. And more or less, guys, like, that was pretty much the bulk of what they had to say on the matter in the earnings call. They really did not spend too much time talking about the litigation at all. No real updates, no real plans aside from what they said here in this very last sentence. We continue to address the litigation by defending ourselves in court or negotiating resolutions as possible. And this also holds true with the Forever Chemical, with the earplug lawsuit. They're just trying to get out without spending as much money as possible, I guess. But anyway, going on, talking a little bit more about, the Forever Chemicals. So one thing that they have announced recently is they're just this is bad business for them. This is bad news, these Forever Chemicals. So they're going to exit all the manufacturing that includes these by the end of 2025. So that is a little bit of an update there, which hopefully will keep them out of hot water. I guess no pun intended, because it ruined a lot of water supplies. Hopefully we'll keep them out of hot water moving forward. But now, moving on to the healthcare spinoff, this is the news. So from the earnings call transcript, it says, we talked about our expectation that we would be completing the spinoff by the end of 2023, early 2024, and that's the focus for the teams as they work to execute this. So for those of you who don't know, 3M is just basically a big industrial conglomerate. They've got all these different divisions, from electronics to consumer products like like post-it notes right here, or like Scotch tape right here. They've got like the automotive segment, they've got healthcare. And so what they're planning to do, and the healthcare makes different medical devices and things used in hospitals and doctors' offices and stuff like that. So they're going to be spinning off that business into its own entity. Very similar thing like AT&T did with Warner Brothers Discovery, just thinking that maybe it'll unlock value for both parties, for, the main 3M and also for the healthcare division. So they expect to complete that by the end of this year or maybe sometime early next year. But otherwise, guys, like as far as the financial aspect of the company, they seemed, and I'm definitely going to like paraphrase here, they seemed pretty confident in their long-term ability. And let me see if I can actually, nah, it's not worth it. I was going to say, let me just pull up the transcript where they said it. But overall, guys, they seem pretty confident in the business from a long-term perspective. They're just going to keep on keeping on, hoping that they can hoping that they can get through all this litigation just as unscathed as possible. Tripping over my words tonight, guys. I'm rusty. This is what happens when I take a week off. But anyway, moving on to the third stock. Actually, no, we're not quite there yet. We still got to talk more 3M. Sorry, guys. So now that we kind of went through the earnings stuff, let's go take a look at 3M on Seeking Alpha. Just see what's been going on with this company, okay? So it's probably no surprise to many of you guys out there that in the last year, 3M has not been performing well, okay? In the last year, they're down 33%. Just in the last month, they're down another 5%. And this is probably right about where they, reported earnings. So they dropped $7 per share, not quite 10%, but definitely more than 5% just from the earnings announcement, okay? Not great. And we're seeing some, we're going to see we're going to see some articles here that are kind of not the fondest of 3M, and there's going to be more that comes out, I guarantee it. But now in terms of valuation, because obviously, once again, I'm tripping over my words. Obviously, guys, the big question with this company, which is a dividend king, it's been an awesome company for many years. The big question with 3M, really, and most of the risk comes from the litigation stuff. And so the big question is, is it still a buy despite what's going on with these two different litigations? And I can't answer that for you, obviously, but I can tell you personally, I'm holding. We'll take a look at my 3M position in a moment. But, if you were thinking about buying, I got to say, it's really not the worst time to buy. I mean, the share price is definitely compressed, down 33%. The PE ratio for a company like this is really not too bad, 12.75. And we can see that this is about 30% lower than the 5-year average. And looking at the other two metrics, the price to book, this is 52% lower than the 5-year average price to book. There's no forward price to cash flow measured here. I'm not exactly sure why, but in the trailing 12 months, this is down about 24% on a 5-year average. So once again, all three valuation metrics are pointing to a discount just compared to the historical average, which is no surprise. It goes without saying because, we saw what's been going on with the share price. But all of that comes back to the litigation, guys. All of that is from those two pieces of litigation. If we were making a drinking game out of this live stream, you'd have to take a shot every time I said litigation. But anyway, getting into and you guys would all be under the table right now. But getting into the dividend stats, guys, looking at their forward yield, I guess this is one of the silver linings that's come out of all of this, is because the share price has gotten so compressed, it's really pushed this stock's dividend yield up to the moon. It's currently sitting at 5.28%, which is unreal. And even so, the payout ratio is still not too bad, 59%. And the 5-year growth rate's pretty average, about 5% as well. But, they are a dividend king with 64 years of growth. And that's also one thing, because it is a dividend king, that is one of the things that many people are also concerned about is, well, if they have to pay out a lot of money, for these lawsuits, are they going to cut the dividend? It's a possibility, but I don't know. I would have thought it, and I don't know, maybe this is just their positioning. I would have thought maybe if they were more worried about it or if it was a bigger concern to them, they maybe would have spoken on it more in their earnings call. But then again, maybe not. Maybe no news is good news. And maybe they don't have any news. I don't know. But it all comes back to that. We'll see what happens with that. But anyway, guys, moving on to the third and final stock, we're talking about Intel. And it did not go well, okay? Intel missed on both the top and the bottom line for the quarter, okay? Their earnings per share was only 10 cents, which is considerably lower then like it was a huge year over year loss. It was like 92% lower than the fourth quarter in 2021. And then the revenue, $14 billion for the quarter, missed by about $500 million. So that's a pretty big miss, guys. And then going over here, here are some of the highlights. These are the full year numbers. So for the full year, they brought in $63 billion of revenue, which is down 16% year over year. So they did 16% less in sales than they did the prior year. And the full year earnings per share was down a lot, down 65%. That bottom line is down quite a bit, guys. And we'll take a look at each individual segment to maybe explain why, some of the reasons why this happened. But before we get to that, guys, no, I guess we're actually at that stage now. Excuse me. So we're going to look at a few different segments. The client computing group, which is basically the chips they make for computers and PCs and stuff, that saw, let me zoom in here because it's kind of small on my end here. So that was down 36% year over year in the quarter. And they're blaming this on lower PC demand, which makes sense. Consumers changing their spending habits with fears of a recession, all that jazz. You guys know that. And also customer inventory reduction. So that was not great. And not only was the revenue down 36%, but the operating income was down 82% from the segment. So that's really not too good. And then the next segment, guys, which is a big one for them, data center and AI group, the revenue from this was down 33% year over year. And this one I think is a bit more concerning because this loss in revenue and big drop in operating income as well, part of that came from competitive pressure, which means that they are losing business to their competitors in this division. Now, if we go back to this screen here, the prior segment, the client computing group, these issues, lower PC demand, kind of more macro stuff. This is probably going to affect their peers as well. But this losing out to the competition, this is as direct result of Intel not having as much to offer as their competitors, which is a problem. But then here's some good news, a little bit of good news from Intel. These other segments, which aren't as big as the first two, they have their accelerated computing systems and graphics group. This was actually up 1% year over year. Mobileye crushed it year over year, which is their automated driving segment. And the revenue for this was up 59% year over year. And then last but not least, their foundry services, which is also a big deal. This was up 30% year over year on increased automotive shipments. So there is some good news there, but by and large, it was bad news coming out of Intel. And this is kind of what they're anticipating for this upcoming year in 2023, or at least in the first quarter, excuse me. So for the first 3 months of the year, they're anticipating $10.5 to $11.5 billion of revenue, which I believe it's like $3 to $4 billion lower than they did this last quarter, and this would also be a 40% reduction year over year. Okay, the gross margin 39%, which for Intel is really bad, guys. This company usually sits 50% gross profit and above. Okay, so this is not great. And then last but not least, they're actually anticipating negative earnings for this quarter, which is going to be a 117% loss year over year. So it's really not looking good for Intel. And let's actually jump over to Seeking Alpha now and kind of dive into some of the numbers here. Now, one big thing to note, guys, let me zoom in on this actually. So after this earnings announcement, which came out after the market closed, Intel is down almost 10% in after hours. That's crazy. So by this time tomorrow, the share price is going to be 27, maybe below $27 if this keeps going, which is not the lowest we've seen it, right? Like Intel's 52-week low is about $24.50. So, it's not as low as it's been, but it could definitely get back down here based on this news and potentially even lower. And just kind of looking at all-time periods here, in the last month, they're down. Well, actually, excuse me. In the last month, they're up 16.8%. But this will take definitely take a chunk out of that. But still, in the last year, they're down nearly 42%. So Intel's been getting wrecked. The PE ratio is 15.22, which actually I think is going to be a bit higher than average. Yeah, it's a bit higher than average. So the average is 12.08. So it's 26% higher than the 5-year average, which comes not as a result of the share price going up. It comes more as a result of earnings going down, right? Because those are the two metrics that go into the PE calculation. It's price to earnings per share. Price per share has gone down, but earnings per share has gone down at a considerably more aggressive level, enough so at least to raise the PE ratio. So that's not great. But then looking at some of the other metrics, the price to book is going to be pretty nice. They're trading pretty close to their book value at 1.23. This is 51.5 or 51.4% lower than the 5-year average. And the price to cash flow is nice and low in the single digits. This is also about almost 4% higher than the 5-year average. So this is a bit higher than usual. That's not great. But once again, guys, because the share price has gotten so compressed, the dividend yield has been pushed up. And I think I've seen this in the 5s not too recently, and it probably will be back in the 5% range tomorrow. So it's right there. Payout ratio 51%, 5-year growth rate over 6%, and they have 8 years of dividend growth. And they did with this earnings announcement, they did declare another dividend, 0.365, so 36.5 shares, which I think is in line with the previous. Does it say here? Yeah, in line with the previous dividend. So they haven't raised the dividend yet. I'm not even sure if this is let's go take a look. I'm not even sure if this was the quarter where they normally would raise the dividend. Looks like they normally raise it. Yeah, well, when do they raise it? Yeah, I guess I guess they normally would have announced a raise, right? At this point, just based on the schedule. So I don't know. I don't know what's going on there, guys. But and as far as buying Intel, like, should you buy Intel with all this going on? Personally, I don't know. It's so tough to say. Like, it just seems with every quarter, there's more risk attached to this company. And I'm personally going to be holding the stock, and I'll show you my position here. Let me pull it up on the screen. I'm personally going to be holding, but I don't know. Like, I'm still a bit wary to start buying. I mean, and this is by far my portfolio's worst performing position. I have 63 shares. My average cost is very high, about $44.3 with the average share, or with the share price of $30. So what is my loss right now? I'm down 32% just on a market basis. So just share price returns, I'm down 32%. And then with dividends, that brings my loss to just about 30%. So, that gives me about $70, which is about what I've brought in from this company in dividends so far. But yeah, guys, for me, it's not feeling too good with Intel. But at the same time, like, having said all of this, how do I say this? At the same time, this probably should not have come as much of a surprise, because we knew this was going to be a multi-year deal where they were going to be in trouble, just while they're spending so much to build out this foundry business, which has seen growth, quarter over quarter for sure, and year over year as well. So at the same time, maybe we can look at it as business as usual. This probably should have been expected with Intel. And really, from a long-term perspective, at least for me, the story doesn't change. Like, it's obviously not good to see the earnings come in below estimates. The earnings were expected to be bad, but it was still below estimate. And it still doesn't feel good to see that at all. But at the same time, at least for me, I don't think it changes things over the next few years. And that's why I said I'm still holding strong with Intel. I'm not going to sell. I maybe right now, like, if things turn around, this is how I think about it, guys. It's oh my gosh, it is such a dilemma, because a couple years from now, few years from now, if it turns out that whoever the Intel bulls were right, those of us that have held through all this, or will have held through all this, if it turns out we were right, man, I'm going to be kicking myself so hard for not buying right now today. And this is like the big dilemma. And it was the same exact thing with, it was the same exact thing with AT&T, who recently was like $14, $15, $16 per share. And it seems like they're coming out of it and are really on the up and up. And, once again, 3M could be another example of this. They're going through all this litigation, and if they come out of it, which I think they'll probably come out of it, but if they come out of it better than ever, it's like, man, we're going to be kicking ourselves for not buying today. And that's like the big, obviously there's so many like what ifs, and we can't predict the futures, but it's like, this is where being an investor becomes tricky, because it seems like a really opportune time, but you have to, at the same time, like, if you're going to pull the trigger with all this stuff going on, you've got to have man, you got to have some thick skin. You got to have a strong stomach because it's like, yeah, I don't know. Anyway, I could talk about this all day and night. I really want to hear what you guys have to say. I think I've said enough at this point. I want to hear from you guys. I'm going to go through the live chat because I know you guys have been talking about all three of these, so we've been going through it. But let me know, like, do you guys own any of these stocks, AT&T, 3M, and Intel? And if so, like, what do you think about all this? What are you doing? Are you guys buying Intel after today's news? Are you buying 3M after the recent earnings, AT&T? Let me know in the live chat, and also let me know in the comments below if you're watching the replay. I'm super curious. I'm going to go through some of the comments in the live chat and see what you guys have to say. Like, there's going to be some good stuff in here. I'm excited to go through this. So let me see. Anyway, excuse me while I pull up some of these comments, guys. Talk amongst yourselves. Talk amongst yourselves. We'll put some of these comments up on the screen. Let me take a little sip of water though. Okay. And with this said, like, I should reiterate, I said this earlier in the video, I have not listened to Intel's earnings call yet. Usually there's like a day delay when they populate on Seeking Alpha. And what I like to do, I'll just show you guys, actually. It's probably the easiest. I can do it on my computer. I don't know why I pull up my iPad. What I like to do and how I like to listen to earnings calls. So let's go to AT&T, for example. So on Seeking Alpha, I usually do it on my iPad. I'll go over here to the news where they'll show the earnings call transcript. Pull it up, and you guys can see this is all the text from the earnings call. And then what I'll do is I'll just hit the play call button. I won't do it right now, but I'll hit the play call button and it opens up a little media player just within the app. Like if you're doing it on your phone, if you're doing it on your iPad, or in the app, it'll pull up a player there. And that's how I like to listen to the transcripts or the earnings calls. But there's usually like a day delay from when Seeking Alpha has it on the app. So I'm going to check that out tomorrow. I'm not on my word game tonight, guys. I'm tripping over everything. It's like my tongue has two left feet. I'm just tripping over all my words. Let's see here. Yeah, I see a lot of you guys. I'm about 20 minutes behind in the chat right now. A lot of you guys are talking about Intel, but PDS here, like this probably sums it up. My long-term thesis has not changed. Harris has a very similar sentiment. I'm willing to wait it out with Intel for 1 year and reassess then. I'll nibble, but won't go heavy adding. Yeah, and I think that's smart. And I know for me personally, like, it's especially tempting to buy right now because, I mean, like you guys saw, my average cost is in the 40s still. 40s. Not great positioning at all. So it becomes very tempting to lower my average cost per share because there's a really great opportunity to do so. And having said that, that was something I pulled the trigger on when it came to Starbucks. When Starbucks dipped down into the mid 70s, upper 60s for a minute, man, I was buying every single week, which you guys may remember, and it really paid off. I lowered my average cost per share from just under $100 to just under $90, and it made a big difference in my return today. So, seeing it succeed in the past, like, definitely makes it tempting, but you got to take it case by case because they're totally different companies, totally different reasons for the share price compression too. So anyway, let's keep going. I really just want to get to Intel. I see my man Zaldath in the chat. What's up, Zal? How you doing, man? Let's keep going here. Okay, bear with me, guys. I'm looking for the Intel comments. So this is do you really think Intel will bounce back? I mean, it's anybody's guess. Like, here's the thing. So I do think they'll bounce back. I really think they'll bounce back. They've got support from the government. Just the industry in itself is a huge tailwind. There's going to be growth all across the board in the semiconductor space, and that will work in Intel's favor. So I think you combine, and so taking a step back, because of that, I think it's very possible that increasing the manufacturing side of things will be a good move. So I think they'll bounce back. It just sucks right now. Just sucks. The big thing too is the dividend. Like I was reading some articles. I read a couple articles just on Seeking Alpha, and that was one thing that was said in maybe I just read one, but that was one thing that was said in the article was dividend cut might not come in 2023, but and maybe it was even in the comments too. It's like people are expecting that dividend will be cut, and that's something that I need to spend a little more time on. Just kind of go back through the financials and see where they're at. I hope that's not the case, though. That'll suck. That will really suck. Yeah, and then Casey brings up a good point. And this was something I tried to touch on at the end of my tangent there. So for the Intel bulls, nothing in this quarter changes the long-term thesis, right? It was always a turnaround play. Yeah, it was always a turnaround play, for sure. And it's like it's still, man, we're still not even 50%, not even, we might be 25% of the way through the turnaround. We'll have to see. But Zal's feeling good. He says Intel is looking more attractive now. Okay. Zal thinks Intel's put on a little lipstick, wearing some high heels. Intel might be looking kind of pretty. Yes, and Shamir, thank you so much. Guys, don't forget, if you haven't done so already, don't forget to hit that like button if you're enjoying the stream, if you're having fun on tonight's Dividend Happy Hour. And also, if you're not subscribed to the channel, please do so as well. We've been making some great strides this month. Let me tell you guys, it's been a great month on YouTube. And with that, thank you all so much for your support, continued support on the channel. It really means a lot. I'm so stoked to see this thing continue to grow. Let's see. Yeah, still a turnaround. Yep. Lucas, same sentiment. Still a turnaround. I think it's a long-term play. It's going to take a bit. Yep. And Mosby, yeah, that's always been the dilemma. Welcome to the market. Yep. Welcome to the market, guys. Things can't always go up. Things can't always go up. And this is just when it becomes kind of a mind F. Like, what do you do? What do you do right now? Do you buy or is it wrecked? And here's the thing that makes it tough, too. There's so... we spend so much time like reading reports and reading things on Seeking Alpha and watching YouTube videos on these different companies. And I think it really, I don't know, I think it can really mess with you. Like it can, because obviously like we always preach to, do your own due diligence, come to your own conclusions. But sometimes it makes it hard when you're getting all these different opinions thrown at you at once. It kind of makes it difficult to decipher what you individually really think about what's going on, which is an important thing to know, Okay. Yeah, and so in that, to Lucas's point, your only regret will be that you wish you'd bought more. Yep. So, okay, this is a good comment. Casey says on Intel, prudent position sizing is a really great way to control risk on high risk, high reward plays, if that's how you see Intel. Staying disciplined on the weighting can save you. Exactly. And that's, honestly, that's something I always go back to in my mind where, like I've said, my average cost with this position sucks. It's not great. Really good time to average down and bring that average cost down. But already Intel is like 5% of my portfolio. And being that it's a higher risk position right now, I'm just not so sure that I want to add more. And so that's kind of why, just for me personally, I'm like, yeah, it's enticing, but I'm probably just best off holding and contributing dollars to positions that I feel a little bit more secure about right now. Maybe maybe AT&T is a good example of that. AT&T, KRC, you guys know I love me some KRC. Still down on that. Feeling good about that one. Procter & Gamble, Johnson & Johnson's right near my average cost, so I've got some options. Let's see, and then Journeyman here, this is the first time I've seen this in the live chat. Intel is looking like a value trap to me, and there's always that possibility. I think, man, and I think it's way too soon to tell if that's actually the reality. There's just so much, like I said earlier, there's just so much what's going to happen, what if attached to this company right now. So anyway. Let's see. Yeah, and then Pokey DJ, I will start investing in Intel once I see it go down. I do think that it will bounce back since it is a company that competes so well in the chip industry. It is, you know. Intel's one of the unique companies where they do both sides of it. They do both the designing of the chips, which is what other companies like Nvidia and AMD do. They just do designing of their chips. But Intel also manufactures their chips, which is what Taiwan Semiconductor Manufacturing does. So they've kind of got their hands in both, which is unique for a company in this space, which I haven't decided if that is a good thing or a bad thing yet. And you know, it might be a double-edged sword because it's nice that they kind of are diversifying their revenue in that regard. But at the same time, it makes it harder to be a specialist in either one of those categories because they're not just focusing on one thing, if that makes sense. But like Pokey said, like they've competed very well in the chip industry. They're still, you know, you've read things about other companies taking some of the market share from Intel, but still, like they maintain a really solid percentage of the market. So I don't know. It's tough. Let's see here. So Tara says, Intel and 3M are part of my Dogs of the Dow experiment. Would you explain this to me? So what is this experiment? What is the Dogs of the Dow? I've seen this a few other places, like on Twitter. I know Dogs of the Dow is like a common thing, but I've honestly not read into exactly what that is. Is this basically just you're buying the laggards of the Dow Jones Index? Is that what it is, to see if maybe the turnarounds will play off? Let me know in the live chat. I'm curious, and I should know this. I should know this, but I don't. Let's see. I know Mark Rusin recently made a video. I don't know how recent, maybe within the last month, that was about the Dogs of the Dow, and I should probably check that out. Let's see here. Yeah, so Brett here says Intel or Apple Silicon for me was the end of being an Intel investor. But you know what? Like, having said that, Apple, they design those chips, but they don't manufacture those chips. And that's where Intel can come into play. And I've read some things that maybe hint, and I think TSM is manufacturing the chips right now for Intel, but I've read some rumors that Apple's considering switching over to Intel and having them design the chips, which would be huge. Let's see. Casey's really not hyped on Intel. Definitely not feeling bullish about it. Fair enough. Charles, got a jet. Y'all have a safe weekend. See you later, my friend. Thank you for tuning in. Always good to see you in the Dividend Happy Hour. Let's see. Okay, Dan, this is a good point. So, Ryan, I'll be honest. I wouldn't buy more Intel until they build the 2 new fabs in New Mexico and Ohio. You have those huge costs and hope the government assistance works out. Yeah, and that's the thing. The government could be financing a lot of those, and they're even in talks right now with some European companies to open other manufacturing facilities abroad, which is great because that'll further diversify the supply chain for chips and not just have it in one place. I'm glad to see it. I'm glad to see there being more of an effort to bring that manufacturing back here to the United States, but it's also not a bad idea to have that in Europe as well. And I think they're talking with Italy. I think they are possibly doing something in Germany as well. So it's good. But yeah, it definitely is a lot of money. But hopefully, like I said, at least here in the United States, the government can help finance some of that. Let's see. Dang, Zal. So his Intel cost basis is in the $32 range, and he's looking forward to the chance to get it under $30. That's awesome. Dude, that's a great average cost. Good for you, man. Oh, nice. And then going back to AT&T, Emmanuel says on AT&T, he's up 20%, built up his position in October. That's awesome. Good stuff. Good for you. And then Miguel, in contrast to what Casey's feeling, Miguel's feeling pretty good about Intel. He's going to buy some more tomorrow. Good stuff. Oh, yeah. And then Ben, this is like going back to what I was saying. Sometimes you get all these different opinions. Get it here in the live chat, what people are doing, probably in the comments of this video. Other videos of people talking about these stocks, Seeking Alpha articles. You'll see it on CNBC. There's too much information out there. Sometimes you just got to shut it off and just, listen to the transcript or listen to the earnings call, or read the transcript, go through the annual report, maybe read a couple articles and decide for yourself. Does Intel have a moat? It's tough to say at this point because it doesn't really seem like it. So back then, I think there was just less competition in this space, which would have been their moat. Like there wasn't AMD or an NVIDIA in the picture, so Intel just had a lot of the TAM, the total available market. I think that's what TAM stands for, something like that. So they were able to just get a lot of that business because they were the go-to guys. And I guess if they did have a moat, just the name, the brand Intel, it's such a iconic name in the space, so that could be, I don't know if it's a moat, but it is an advantage. It's an advantage it's an advantage and also possibly a disadvantage that they both design chips and manufacture chips. But yeah, I don't know if there's an actual moat. But there's, not every single business has a moat, and that doesn't make it a bad business. Like we can look at Home Depot, we can look at Lowe's, we can look at, let's just stick with those two, Home Depot and Lowe's. Those, I don't believe those have moats, and maybe they do, but not like an Apple does, not like Coca-Cola does, not like those sort of companies, not like Starbucks does, I believe. I don't know that every single company has a moat, but I also don't know that that's entirely a necessity. Let me know in the live chat too. I'm actually curious to get your guys' take on that. Ivan, that was a really good question. That made me think. Thank you. Okay, let's keep going. Shout out for one of my favorite dividend growth stocks, Tractor Supply. They crushed earnings today. I'm going to be country boy rich someday. Good for you, Dan. That's awesome, man. That's awesome. And kind of not quite on the same topic, but someone brought up Camping World to me, CWH. My gosh, guys. And I think we've talked about that stock before. I know some of you guys have mentioned it to me as well. My goodness, that company is looking great. The financials are looking very strong. Valuation's looking rock solid. And the dividend stats are top notch. I think they have a really high dividend yield, and I think they've been growing that thing for at least 10 years. So I was very surprised by that. Camping World looks awesome, but I don't really know. And I'm kind of going on a little rant here. I don't really know about the business itself. I've just kind of looked at those kind of surface level numbers, and it's like just at a glance that looks solid. Oh, this is a good question. So, and I want to know about this from you guys as well. Anthony wants to know, what was the first dividend stock you bought starting this journey? I don't remember what specifically the very first dividend stock that I bought was. But I can tell you that the first few that I picked up were Apple, which I did not hold for very long. I ended up selling Apple and using that to buy, I think, like Lockheed Martin or like Lockheed Martin or something like that. But then I ended up buying back Apple like a month ago, not too long ago. Apple was one of them. Coca-Cola was one of them. Procter & Gamble was one. Starbucks was definitely one. AT&T was one of the first dividend stocks I bought. What else? Flower Foods, I think, is the company. FLO. I used to have that in my portfolio. I used to have SPHD. Trying to remember some others. Those are, oh no, I had Barrick Gold, GOLD. And I actually did pretty well with that position. And those, just off the top of my head, those are the first stocks that I remember buying when I first started dividend investing. And Anthony, if you go back, or Anthony, excuse me, if you go back to like my earlier videos, you can see kind of when I started really getting into dividend investing. So when I first started my channel, I wasn't like strictly a dividend investor. I had positions in my portfolio like Dropbox, Virgin Galactic, Beyond Meat, guys. I did, I was such a rookie. I was like at the very start of my investing journey. Didn't know a lick of anything. But I had those sort of stocks. I had CRISPR Therapeutics, which actually was killer for me. I think I ended up having like a 230% return on that stock when I sold it. By far like my best investment to date. I also had, there's one other one that Coty, COTY is the company and also the ticker symbol. Yeah, I actually did pretty well with that stock too, but I have videos, like a lot of my earlier videos were talking about stocks like these. And yeah, and then I don't know. I was kind of like half in, half out with dividend investing, and then at some point, and this is all documented, at some point I just decided to go full on, full-fledged dividend investor, and the rest is history. So glad I did that too. Let's see. Let's see. That was a really good question. That was fun. Okay, going back to dogs of the Dow. That's what I thought. Laggards. Okay, exactly. Let me. I got to catch up to the live chat. I'm about 10 minutes behind, which for me is not bad. We're still talking about some Intel. I see that in the live chat. Okay, Ron wants to know, are you going to go live tomorrow as well? I, unfortunately, am not going to go live tomorrow. So the reason I did it tonight instead of tomorrow is I've got some friends from home coming into town, and I'm just going to be hanging out with them. Hanging out with them, having a good time. So unfortunately, I won't be around to do a live stream tomorrow night. So that's why we're doing it tonight. But next week, guys, we'll be back to normal. Be Friday live stream, So I'm looking forward to that. Looking forward to a normal week. Let's see. Let's keep going here. Now I'm about 8 minutes behind. Let's keep going. Makes sense that Apple... Yeah, so Brett says it does make more sense that Apple would produce their own chips. This is going back to an earlier statement. Produce their own chips and rely less on third parties and increase their own margins. If so, they could end up turning into an Intel competitor. Yeah, but the question, I mean, do you think, and I don't know that this would happen. Do you think Intel would, or Apple would sell their chips to, other third-party companies? I don't know. I think they just kind of use them for themselves. I couldn't see them selling chips to HP or to Dell or to Samsung to go in the Galaxy or so on and so forth. I think it's just kind of for their own products. Okay. Spectacular Servals wants to know, what's your favorite portion of Seeking Out Alpha Premium? So, like, full disclosure, hands down, my favorite part about using Seeking Alpha Premium, and this to me, I've always said this to me is what makes it the most worth paying for, and I do think it's very worth paying for, is having access to all of the articles, all of the news, being able to listen to the transcripts, the quarterly earnings, the annual reports, all of that's can be found right there within Seeking Alpha. But if you're just using the free version, you're limited to how much access you get to those things. Like as far as articles and news go, you could only read like 5 per month for free. And if you guys are like me, you could use all that up in just a couple hours. So for me personally, just having access to all of that stuff, uninhibited access, unlimited access to all of that stuff has been a game changer. And I kind of talked a little bit earlier about information overload, reading too many articles and all that stuff. But, it can be helpful. It's definitely a more productive use of time than watching Netflix, I will say. So yeah, I would say that's been my favorite portion about using Seeking Alpha Premium for sure. And also just being able to track my different portfolios on there. And now I've started using this feature more recently, the price alerts. Like I set price alerts for Apple, and that's when I pulled the trigger on Apple. I didn't even have to keep tabs on it. I just got an email saying it was at $127 per share, and I was like, let's do it. So it made it very easy. Good question. Let's see here. Let's see. Oh, Jamal, this is a good question. So I actually get this one a lot, guys. What do you think of AG&C? I'm not a fan of AG&C. I think it's a yield trap, and I'll just kind of go through it real quick to try and explain why. AG&C is a mortgage REIT, I believe, right? Yeah, it's a mortgage REIT. And let's just take a look at the dividend stats real quick, because this is really why people like this company, okay? A 12.65% dividend yield, super high yield. You're getting a really nice cash flow return from AG&C. But if we take a deeper dive and just look at the financials, like one of the first thing we'll notice if we scroll down to the total revenues, like in some years it's negative. Like in some years they're losing money on the top line, which I don't even know how that works. But the revenue is sporadic at best. Okay, we're not seeing consistent growth, which I think, for me personally, like is kind of a non-negotiable. At least seeing for some companies seeing at least steady revenue, but we're not even getting that at all from AG&C. And it's going to be hard to maintain the dividend and increase the dividend. Number one, it's such a high yield, but number two, if they're not even able to increase their sales, and we can see this happening across the last 10 years where every single year they've reduced the dividend. So yeah, the yield is high, but your cash flow return, your cash flow yield on cost is definitely going to be going down every single year because they're reducing that dividend. And it's like, I just don't know why you'd want to own something like that when 10 years ago the dividend was $5 per share. Now it's $1.44 per share. I don't know. It just doesn't make sense to me. So I personally don't think AG&C is a good investment for that reason. But and having said that, like maybe I'm missing something. Like I said, I've never seen a revenue chart look like that where it's actually negative. So, and I also don't really understand mortgage REITs very well. So it's very possible I just don't know enough about it. But it's not my cup of tea. I'll just leave it at that. So let's keep going. And by the way, guys, we're about to wrap it up here in just a few minutes. After this stream, I'm gonna go get some Chipotle, which I'm so excited about. So stoked for some Chipotle. If I wasn't a dividend investor specifically, that's probably one stock I would have in my portfolio for sure. My one qualm with Chipotle is it's not consistent. You can go, like for example, I always get a burrito. One day I'll go and get a burrito and I more or less get the same thing every single time. Get a burrito and it's a behemoth. It's as big as my keyboard. But then there's other times I'll go and it's as big as my mouse. It's all over the place. And I'd say that's the one issue with Chipotle. Otherwise, it's delicious. It's affordable for what you get usually. And it's always packed too. Chipotle is very high demand. So yeah, I wish they paid a dividend. Maybe someday. Oh, this is another good question from Pinoy Stock Investor. Besides Seeking Alpha, do you still use other platforms for research? Yeah, I've been using a bit more Alpha Spread. And I've also been using a lot. I'll give me a second while I pull this up on. Give me a sec while I pull this up on the screen. But I've also, which you guys, if you saw my last live stream, then you'll be familiar with this. But I'm also working on like my own stock snapshot spreadsheet, kind of stock analysis tool. Which give me one sec, guys. I'm going to pull it up on the screen. I just had to log in. And I'll show you this real quick, but I've been using this tool. Okay, where are we? I've been using this tool more lately. Let me show you. You guys might have seen this already, but I've been working on this stock analyzer tool, version 1.0. But basically, my intent with this, and I'm gonna roll this out sometime next month, hopefully. But basically, my intent with this is to all you have to do is put in a ticker symbol. Let's use Apple, and then all this different data loads. You've got like share price metrics, year-to-date performance, 1 year, 5 year. You've got tons of, or actually not tons, but like some important financial metrics here. Revenue per share across the last 10 years, how that's grown, gross profit margin, earnings per share, how the earnings per share has grown, free cash flow, book value, dividends, return on equity, return on invested capital, and then, shares outstanding. So my goal is to just have all of this automatically populate, which it is, as you guys can see as I'm talking. And then it'll show you, just if we zoom out a little bit, there's these charts here that give you a quick visual of how all of these things are moving. How is the revenue growing? How are the earnings growing? Free cash flow, shares outstanding, book value, dividends, all that stuff. And then it'll even show you like how the return on equity, return on invested capital has been across, and profit margins and dividend growth across, 5 years, 10 years in the last year. So it's been a very helpful tool. And then the last thing, and I'm still fine tuning this part, but I'm almost done with it. I also want it to spit out an intrinsic value. So it'll basically compare 3 different valuation models: discounted cash flow, dividend discount model, and then multiples valuation model, which compares the PE ratios for different competitors. So like Apple, we'd compare the PE ratio to Microsoft or Google, Meta, some stocks like that. And then you get a valuation based on those average PE ratios. And then it'll give you an average intrinsic value just based on the averages of these 3 different models. So something I'm still working on, but I've been using this tool a lot more as I've been making it, just to, number one, work out the kinks, but also number two, I just feel like it's been a really helpful tool so far. I think for me, how I'm going to use it, it's going to be, because it's going to be like a good starting point. Like, for example, if you guys say to me, look up, stock XYZ. Okay, I've never heard of this stock. Let's go check it out. So instead of going to Seeking Alpha and going through the income statement and the balance sheet and the dividend stats and the valuation, I'll just plug it into the snapshot tool, and it'll tell me all that at a glance right there. That's how I plan to use it, is kind of a starting point when doing stock research, and because it gives you a pretty nice overview. So in addition to Seeking Alpha, that's a tool that I've been using. I've also been doing a lot of I've been reading a lot of research reports through Charles Schwab. So through Charles Schwab, I get access to Morningstar, Argus reports, who else? I don't know, a handful of different reports like that. So when looking up companies and researching them, I'll also go through those from Charles Schwab to see what those people say. And then also, my dad started sending me these, and this kind of inspired me to make the stock snapshot tool. But my dad has started sending me the Value Line 600, which kind of does a similar thing. It's like a paper version of the stock snapshot tool, where it's got all the different, you guys can't see this, it's got the different financial numbers right here. This is like an analyst, just some words about the company, what's been going on, what they think about it. And so I've been reading this as well. I've got, what am I looking at right here? This is, I'm a little bit behind. This is December's, and then I've got January's right here that I still need to go through. But yeah, so it's kind of that. I'm really trying to, like I kind of been talking about a couple times, sometimes it's just information overload. I really want to simplify how I'm doing research, because it can be a lot, and you can get so many different opinions and so many different things from all these different angles. So I'm kind of just trying to simplify and fine tune where I'm getting my research. And it's a combination of Seeking Alpha, the stock snapshot tool, maybe some Value Line, maybe some, Morningstar reports, Argus reports, and then directly from the source, quarterly earnings calls, 10Ks, the annual reports, investor presentations if I'm, kind of at the starting point researching a company. It's those sort of things. And that's kind of encompasses exactly all the different sources. So that was kind of a roundabout answer, but hopefully that made sense. Let's see. And I just want to get caught up in the chat real quick, see if there's any last things. Wait, Ben, Please don't remove the video that I went to watch later. Oh no, I'm not gonna remove any videos. If you're talking about the stock snapshot tool, yeah, that's just the last live stream I did. I pretty much do a demo of it, kind of like I briefly did in this video. But yeah, I won't remove that, and I'll keep you guys posted on when I'm going to roll that out. I'm hoping to roll it out sometime in the next month, sometime in February. I also, earlier this week, I finalized version 6.0 of the spreadsheet, the free dividend portfolio tracking spreadsheet. I'm also hoping to put out a video just releasing that next month. It's been a lot of work, guys. There's just been a lot of stuff going on in addition to making these videos. Really good stuff, but it's been keeping me busy. So there's some good stuff coming your guys' way. The spreadsheet, obviously, that's always free. I have decided I will be selling this stock snapshot tool. It won't be that much. It'll just be like a small, like one-time thing that I'm selling it for. And then any purchase of that will also just get any future versions for free as well. Which I already have plans like for version 2, version 3 of this spreadsheet. Like I want to make a snapshot tool specifically for real estate investment trusts. I want to make one specifically for ETFs, and those will come out in future versions. So anyone who buys this new stock snapshot tool whenever it comes out will get access to all of that stuff, the new versions for free in the future as well. So let's see. Yeah, guys, and let me see here. I'm pretty much caught up in the chat. And I think because of that, this is a good place to wrap it up. 6 minutes over the hour, so that's pretty solid. But yeah, guys, I think it's a good place to wrap it up. So with that, if you have not done so already, hit the thumbs up on this live stream. I'm so stoked that there's still like 140 people in this stream. That's awesome. But you guys hit the thumbs up on this video if you've not done so already. And also hit that subscribe button if you enjoyed hanging out with me tonight. And also thank you so much for hanging out with me tonight. Really enjoy these dividend happy hours. It's something I look forward to every single week, even though like you guys can probably start to hear it. My voice is getting a little bit hoarse, which is why like I saw a couple comments about doing this for 2 hours. There was no way I could stream for 2 hours and just be talking like this straight. But anyway, guys, thank you so much for tuning in with me tonight. Stay tuned for Sunday's video. I'll be putting out my monthly dividend income video. I'm so stoked to go through those payments with you guys. It was a really good month of dividend income, so definitely check out Sunday's video. And yeah, once again, thank you guys so much for the support on the channel. Thank you so much for tuning in, and I hope you have a good weekend. I will see you in the next one. Stay out of trouble, guys. I don't want to be getting any calls or emails to come bail you out of jail. I'm talking to you, Shamir.